Welcome back, YouTube. So today we're going to do another deep analysis on the overall market and what we can expect going in the Fed going into the Jackson Hole meeting, and kind of what the reason that we're seeing a lot of low volume and stuff this week. Because here, if you're looking at the U.S. markets, you'll see that it's kind of flat. Not really much volume anywhere, really. Even if you're looking at crypto or some of the stocks, you'll see that we had that little bump up, which is why I think that the Jackson Hole meeting will be a little bit more aggressive than most tend to think. But overall, this is an indicator, in my opinion, that big money institutions are kind of waiting to see what is said at this meeting, because the rallies and stuff that we're seeing, even the bump that we got from the student loan announcement and stuff like that, overall, for inflation, you do not want people going out and putting pressure back on supply. What you don't want is this reversal, kind of like in the interest rates, whether that be for housing and stuff like that. Even though it's just recently happened, this is not what you want just with one negative CPI report. But we're going to get into that in a moment. Let's take a look here at the data. We'll see that, let's see, NASDAQ, we're up, let's see, 1.67%, S&P 1.47%. Gold's down 0.18, oil's up 0.51. The Euro USD down 0.08, VIX down 4.56. And let's see, Dow Jones Industrial, let's see, 0.98, up 0.98. So again, very low volume here, nothing really big as far as what's going on with the changes here in percentage. Let's take a look here at the charts as well, because I know sometimes even the numbers, it can be better put in a visual when you see the actual candlesticks. Let's take a look here. And this is one of the things I was speaking about earlier today, even with like my patrons. This here, when you see like these massive spikes here and you start seeing the reversal in interest rates and housing and stuff like that, this is not what the Fed wants. Yes, we had a negative CPI number, but where we are now, whether that be 8% or whatever, that's a long way from where we have to go with inflation. So what you don't want is for people to start spending money and stuff like that and putting the pressure on the rates and stuff that the Fed has set up. This can dramatically throw things off of schedule, and they're going to have to come back and be even more aggressive next time. So now when you kind of have like your feet to the fire, that's something you kind of want to keep up with the overall intensity. So what we're looking at here, and this is just as of like today, this is yesterday, we had the pretty much the trend reversal here. I'm not going to say it's a reversal until we get above like 431 or something like that. But overall, we're having this big rally back up. And if you look at the numbers and stuff, it's looking, I don't want to say it's looking bullish, but in my opinion, as I said earlier, I do believe that this is micro noise, but I do believe that the Fed is going to be cautious so that this is not encouraged in a way that is going to throw off the CPI numbers for next month. Because if we start seeing like these rallies here and stuff like that, and we're kind of, if we don't have like a dramatic decrease, or if it's like stagnant or staying the same and stuff like that, that's going to throw off these projections here, which can cause additional panic. So it's a very delicate situation. And I believe ultimately they're going to be a little bit more hawkish here and try and make sure that they are being aggressive to get inflation under control and stay, of course, on schedule. Especially after the track record that they've had over the last year, 6 months of pretty much missing inflation every month. And this is honestly the negative CPI that we got last meeting. That was the only time, that was the only positive news we've got in just about a year when it comes down to dealing with inflation. So that was like, we're like 1 out of like 13. So they can't afford for this to kind of break even and stuff like that next month, or God forbid it goes up again, then we're really going to be in for a shocker. What we're looking for tomorrow is the tone that he's going to have. And I think that a lot of the big money is waiting to kind of see what happens, what the Fed and overall how they're feeling, and whether or not they're going to be more aggressive. So this is kind of where we're seeing like some retailers and stuff may start entering back in. I know, of course, with my group and stuff, we've been talking about taking like opposite positions. But when you look at the overall tone of the market and the low volume across Bitcoin, Ethereum, Doge, SPY, you see like literally just like a flat line. that's big money waiting. And I think tomorrow is going to be the indicator for set us up for the next few weeks. And let's not forget that a couple of weeks after that, of course, we're going to have our CPI numbers. So I really think that the next week really is going to be very telling. Obviously, tomorrow's Friday, but we'll kind of see the majority of that effect next week. But this is a schedule for, I believe, 10 a.m. Washington time tomorrow. So we may, if he says something dramatic enough, we can certainly get a reaction tomorrow. But I believe overall, this is going to play out, roll out into next week. But yes, 10 a.m. his speech, Friday morning, 10 a.m. Washington time. So this will, what is this? Well, I guess that's Washington, not Washington, D.C. So maybe like around like 1 Eastern. So we'll see. This is exactly right here. Investors will be listening closely for, investors will listen closely for any clues about how the U.S. Central Bank is thinking about the pace of interest rate increases ahead of its September 20th, 21st policy meeting, after raising its benchmark rate by 0.75 of a percentage point at each of its last 2 meetings. So that is going to literally set the tone. So if this is something where he's saying, okay, well, we're not happy with the progression that we're seeing here, or this is, you guys are getting carried away out there, or they're reducing the home interest rates and stuff, and they say we're going to maintain the 0.75 or get more aggressive, this is, of course, you're going to see the markets go the opposite way. So when you're placing your aggressive positions, be careful, in my opinion, but certainly until after tomorrow. I say even after the Fed meeting, because until we have evidence, you guys know how I am. If there's no evidence, I don't make those kinds of gambles. But you, of course, do what's best for you. Personally, I'm expecting him to keep the same tone, but ultimately be more aggressive as far as for maybe even keeping another 0.75 for next month. Just to be safe, because ultimately there's still a big gap from where we are now, where we have to be. I've seen a couple articles saying that he's going to be more dovish, and here's top 5 reasons he's going to be dovish and stuff like that. I don't believe that we're in that position to start being like dovish, or even doing like a victory lap as far as saying, oh, well, inflation has been beaten, let's go ahead and plan our descent. I definitely think that we're more on a wait and see mode, but that's just my opinion. We're going to obviously have to tune in together tomorrow. Let me know what you guys think in the comment section. I know that the big money has been waiting, and obviously, some retailers as well, they're waiting on better pricing to see if we're going to get that breakdown. There's evidence of that throughout all the markets for this week. So let me know what you guys are doing in the comments. Check out Moomoo for payment for order flow free trading. The link for my trades and stuff via Patreon, that's in the description section. And I will see you guys in the next video.